Hey everybody, welcome to the webinar. A ton of people here, and these festivals are always well attended, but man, there's a really nice number of people. And I guess I'm curious, and you can let me know in the question box, but has all this pandemic made you more interested in trading or less interested? Because the friends I talk to in the business, people are way more interested in trading, almost as if they want to take their own responsibility for their own money. But anyway, I'm fascinated by that and really happy to have you all here. And we're going to talk about a different way to trade breakouts. We're going to give you a system, and we're going to give you some deeper thoughts too. First, a disclaimer: I am going to get into the system. I am going to give you numbers. These are hypothetical numbers. I do put in trading costs in all my numbers, try to make it realistic. But I did not take these trades actually out of my account, so take it with a grain of salt. But I do try to make these as accurate as possible. And we're going to go over a bunch of things today. We're going to talk about fads, because when it comes down to trading, there are different ways to look at it. What system are you going to pick? Is it more of a fad? Because if it is, those are fun. Fads are awesome. Here's what's not awesome is trading with universal principles. We'll get into that. We're going to talk about a very simple system. In fact, this system is so simple, you probably don't think it'll work, or you probably won't think it'll work. I was a little surprised as I started researching breakouts many moons ago. I wonder, will you mind rebel? Because it's a pretty simple system. And then we'll have sample trades. We're going to have results, hypothetical results, of course, and we'll have a portfolio for you that you could take with you on your merry way. But we're going to start with an overarching principle. If you're looking to get really good at anything, whether that's sports, business, any sort of skill acquirement, here's my tip for you, and I've only seen it work 100% of the time, and that is do what you like. Science has shown, all sorts of studies show, that the system or the business or the thing that you're searching for is not as important as matching what you're doing to what you like. For example, you coming out of college and you get offered a $200,000 a year job. Seems like that's it. I should pick that. But it's doing something you don't like. Guess what'll happen to that $200,000 job? It'll go far away. What if you have a relationship with someone that seems to have everything right on paper? Guess what? You don't actually like that person, right? So do what you like. You've seen a lot of systems here at the festival. I'm going to show you another one. It doesn't matter how good it is. It matters what you like, right? Probably, not probably, definitely this is more important than any system that anybody can show you. Okay. Now, that being said, we're going to discuss something that really all trading systems fall under, and that is, what do you like? Yes, but there are stuff that is kind of more get rich quick, stuff that is probably not going to be around for a long time, and then there are things that are perennial sellers. For example, do you like the latest book that just came out last month? Everybody's talking about it. Or do you like the perennial seller, the Great Gatsby, for example? Right? There is a very different paradigm between these two. And you have to immediately decide, well, not immediately, but you have to decide sometime soon. You have to decide what it is you like. Now, it may seem like I'm criticizing fads, and I'm not. You can make money trading fads, and they do spectacularly well. Fads, something that's not going to be around a year or 2 years from now, they can do spectacularly well, right? For example, pet rocks. Does anyone listening even know what a pet rock is? Maybe, maybe not. If you're of a certain age, maybe you do. Pet rocks were literally that. Someone decided to write a fake story about a rock, put it in a box, and sell it. Now, who would buy that? I mean, clearly, rock selling is not going to last forever. But who would do it? Well, someone who thought that would sell. Did the fad work? Raise your hand if you think the fad worked. I wrote it in small type there. You know, Pet Rocks made $15 million, and that's in 1980 money. Crazy. How about MySpace? MySpace was a fad. In the middle of it, people said MySpace is going to be around forever, but it wasn't. MySpace is gone now. But if you're a musician, especially, or even in the artistic realm, MySpace was it. If you weren't in my space, you weren't going to get any gigs. And it worked spectacularly well for a while. What about tulips? You are aware of the tulip mania, right? If you study your trading history, I mean, we all know about the tulip mania. If you don't, there was a time in the 1600s when tulips were just about the most valuable commodity on earth. It sounds ridiculous. Well, you'll see a chart here shortly. And then, oh boy, I've got friends who believe in Bitcoin, so I better say this softly so as not to get a fist fight tonight. But Bitcoin, now you can say blockchains forever. You can say that the dollar and all the world's currencies are fake and they're propped up by governments, and Bitcoin is the only real thing. Okay, I get it. But if you look at a chart of Bitcoin, it's kind of a fad, right? Well, we'll see. But there are other strategies, getting more specific about trading, right? There are temporary strategies, fads, and there are perennial strategies, strategies that will always work. ARB strategies, right? That is definitely a fad. What's an ARB strategy? Well, it's arbitrage, right? You find a price in Paris on a certain instrument that's higher than the one in America, and you buy one and sell the other, and maybe they're only 5 cents apart. But because of the same thing, like, oh, price must converge. And then you bet on one, the other, and then guess what? They meet in the middle. And it works every time, long-term capital management. That's what some of the smartest people in finance and academia have figured out, that if you found an opportunity somewhere far away and bought one and sold the other, eventually they met in the middle. Even if they went the wrong way for a short time, they met in the middle. Or you could do something like, of course it's ridiculous, but buy a Starbucks mocha in Florida for $3.50 and sell it in New York for $5, something like that. I don't know how you get that mocha there while it's still hot, but you get my point. The point is that ARB strategies won't last. If people were making $1 million buying a mocha at one Starbucks and selling it at another, what is going to happen? If you make enough money, the ARB is going away. And if enough people start doing ARB strategies, long-term capital management, you're going to go broke, which is exactly what long-term capital management did. So we can point our finger and say, long-term capital management, they're stupid. They did ARB strategies, they're temporary. Long-term capital management made 40% per year for 3 years. Made people million and billionaires, right? Yes, it failed. I get it. But you understand? Fads are incredible, right? And honestly, the ARB strategies that Taylor made when she left Axis Firm, I mean, all the quant work that Taylor did, they went to an ARB strategy. Destined to fail, if you ask me. But anyway, moving on. Make no mistake, fads are exciting and they're easy. Think about in the middle of a fad or a hot trading strategy. Everybody's talking when there's a fad going on, right? And even if for Cabbage Patch Kids, that was a few years back, or Bitcoin. I mean, there was a time not that long ago, was it 2018, that I was not trading Bitcoin. I was trading, but not trading Bitcoin. And all of my friends, whether they're traders or not, it's Bitcoin, Bitcoin, Bitcoin. I mean, everyone was talking about it. And that's exciting. People like to be included. Some people, not everyone, but a lot of people feel it's more important to be accepted, to be a part of a group, to be able to talk to other people than to have facts or even be confronted with it. I don't want to hear that Bitcoin is a bubble. I don't want to hear it. I'd rather be accepted with my friends. That's just human nature. There's nothing wrong with that. That's just the way it is. And in a fad, you will know people getting rich. I had friends who bought Bitcoin low and sold it high. They didn't, some of them made a lot of money, some of them made a little money, but I knew people when Bitcoin, right? I knew someone back in the 1600s that bought a tulip and watched it rise tenfold, right? I didn't know that, but you get my point, right? You can see evidence in fads. So you get the human connection. You get everyone talking about it. That's fun. You get a story. That's fun. And you can see the evidence. My friend's getting rich or you're getting rich, okay? But fads don't last. And you have to acknowledge that and you have to say it's okay, which takes us back to do what you like. You have to know what it is you're doing. I'm trading a fad. It may not last forever, but I'm going to make hay while the sun shines, right? Very, very important. That's why doing what you like is absolutely critical. Because if you know, you can say, listen, I know it's not going to last. I'm going to get rich before it goes bad, right? Are you aware of the tulip mania? Check it out. Tulips, this is what, 2? So what, 1 to 60 and back to 0. How exciting would it have been for this 3-year period? For the first year or 2 years, hey, I bought a tulip. Hey, I bought a tulip. Look what it is now. Look what it is now. Everybody's talking. Everybody's buying. How much fun would have been back in 1634 to get involved with this? Of course, that wasn't great, right? And there's your Bitcoin, fad or not fad, right? $500 to 20,000, 2018. How many people did you know? How many people were involved, right? Look at that. How exciting was that? It's on the news. The Winklevoss twins were opening up, right, their fund or whatever in the heck they did. Of course, it dropped down again, and now it's somewhere in the middle, right? Now, if that's exciting, then when you go to the Festival of Traders, find the strategies like that. Find the strategies that win big and may not last. But there's another way to think about it, and that's to do the opposite of fads, do the permanent, okay? If you are more leaning toward the permanent, then you realize the problem with fads is that they're one-dimensional, at least the dark side. Buying into a temporary thing, buying a tulip and thinking that tulips are going to rise forever can be financially fatal. Buying Bitcoin, whether it's here to stay or not, and watching it go from 500 to 20,000 and thinking that it's going to continue to do that at that rate. You understand where we're at? Again, we're not doing what we like, we're doing what somebody else likes, or we're doing what our brain is trying to tell us, okay? We don't really like it because we don't understand it, right? Fads miss that part. That's why they're fads, right? They try to ride a quick moving trend and they try to get rich. But understand all these fads, like they're just one directional, okay? We're buying Bitcoin, we're not trading it. We're not using a system. We're not using a way of looking at this that will work forever. I'm just buying it and holding it and look at how well I'm doing. You see the difference? Trends are eternal, right? So we will get trends in both directions, but that's the secret. If you want to be a permanent trader, you look at both directions. If you go back, the difference between a fad is, woohoo, this is fun. And a trader would say, at some point, a trader would have been out here and maybe even stopped and reversed, right? Same thing with tulips. A trader never would have. If you're buying in a fad, now you start telling yourself stories. Big difference, okay? Now, when you're thinking about what it is you like, here's a problem. One of them is fun and one of them is not. Buying and holding Bitcoin was fun, right? Watching it fall is awful, okay? But this is the bad part. Even if you do have a system, even if you are more biased toward the permanent, and even if you want to do it the right way, you're not just doing one-dimensional trading, right? You have a system. And when Bitcoin falls, then I'm going to trade it. Or I'm going to trade it the other way, or I'm going to just stop out, okay? That's the right way. I'm going to stop out. I have stop losses. Well, you know what stinks about doing it that way? First of all, nobody's excited about it. Second of all, most breakouts, if that's what you're trading, is what we're talking about, most breakouts, or a lot of them, fail. So that's not fun, right? You get no excitement. Oh, and you get losing trades too, right? Trading this way, even though it's permanent, even though trading this way has been around forever and will probably be around forever, almost definitely will be around forever, is very, very hard. Probably the hardest way to trade is to trade something that's going to be around forever. What's the hardest thing to do on a diet? The thing that'll always work forever. Exercise, don't eat too much, stop eating at some point during the day, don't eat all day, right? Who wants to do that? Who wants to stop eating it by 6 p.m.? Who wants to exercise more calories than they take in? Who? Nobody, right? Or some people, but very few. It's the things that will be around forever are the hardest to trade. So in some perverse way, you have to like something that's not very likable. And that's the hard part, right? We're going to talk about trend following. We're going to talk about following the trends in a systematic manner. Really simple, but a systematic manner. And here's the problem with that. And that's why I underlined it. Trend following is the least fun and most successful strategy of all time. And I've studied everything I can get my hands on. And I basically ignored trend following for years and years and years. Why? For some of these very reasons. Don't like the lower win rate. I think trend following is slow. I knew I was much smarter than that, so I could make systems that got in and out. I thought there were all sorts of ways that I could do better than something that's this hard and quote unquote unfun to trade. But I think I was wrong about that, right? Because trend following is doing way better for me than anything I tried to hook up in the kitchen. All right. So you understand where we're going? We're going to get to the systems, but we have to know the why. The why is way more important in these webinars. The why you do what you do is way more important than what I'm going to show you, okay? So again, we're getting back to do what you like. If you like this fad, if you buy Bitcoin, why? Why are you buying Bitcoin? If you're a one-hit wonder, if you're a struggling songwriter and you have this one hit and overnight you have all these millions, are you thinking, oh, it's going to be around forever? You're going to think, man, I was dang lucky, right? And I'm going to put all this money away. If you're going to jump on a fan, know the why. The why will save everything. If you're avoiding trend following, like I did, why do you hate them? Why do you hate strategies like this? Why do you hate boring? What is it, right? Analyze it, why? And figure it out. What's more important? Actually being profitable in a way that will be around for many, many decades to come, or is it the action? Is it the camaraderie? Is it to be able to talk to your friends about Bitcoin? Is it about to know Paul down the street who turned 1,000 into 10,000 or 100,000? That's more exciting than, yeah, I'm up 20% again. It's terrible, right? Not fun. Nobody talks about it. Nobody has fun. So here we go, coming to my upcoming system now, right? We're moving to the actual system. Why is it taking so long? I apologize, but this stuff is important, and I could not live with myself if we didn't talk about the important stuff, okay? The numbers, though, on this are pretty good. This is something that you can take with you, but none of that will matter. AJ was right before me doing a very interesting option strategy. I love options myself, dabbled in options, researched options. I love options, right? Something like that is nothing like this, right? One of these things will make you money. Guess which one is the one that you like, okay? All right, getting to the point. We're gonna follow some trends. I'm gonna give you a trend following system, okay? How are we gonna do it? Trend following's been around forever, but they're still very, very stubborn about how they do it. Well, the famous turtle traders, what they do, they use 20 and 55-day breakouts. So they looked at a chart, when price broke above the high of the past 20 bars, they went long. They also did a 55, they did them both, okay? So why not just do that? Well, if you listen to the message boards, everyone says that it doesn't work anymore, including some of the traders who actually traded it. Does it though? Because I've tested these turtle methods and they work pretty great. Now, you might have to put a tweak or two in. They still work pretty great. Anyway, that's another webinar. But when the turtles and everyone else seemingly, all the billions of dollars and the CTAs and the hedge funds and whatever, 20-day breakout, so past that's 20 bars, 55, it doesn't really take into account like time, right? Yes, I know it's time at 20 bars, but something that's happening only due to time. For example, what happens in December every year, right? Taxes, tax consequences. institutions, mutual funds, whatever, banks sell stuff in December only because it's December. It has nothing to do with a trading strategy. It's, well, for tax purposes, I need to cut it, right? That is totally based on calendar. Well, that's weird. That's nothing like trading the chart. That's trading the calendar. That's odd. What about the end of week? What does trading look on Fridays as compared to every other day? Have you looked? Do you watch it at the end? The end of Friday is very weird. Well, why is that? Well, whether it's futures or Forex or stocks, somebody's scared or happy about the weekend. I got to get in there before the weekend so the price goes up, or I got to get out of this. I can't hold over the weekend. So that, again, has nothing to do with a strategy. That has only to do with time. And what about the end of day? Have you been watching the markets? I've just been enthralled with the markets. I've got CNBC on more in the past few months than I've had on in the past few years. I'm just absolutely enthralled. Sound is off, but I'm absolutely enthralled with CNBC. I'm checking the price on the markets. I'm not even trading the indexes. I'm checking the indexes constantly because A, it's fascinating. B, I want to know what's going on in the country and the world. But C, watch what happens at the end of day. The Dow was up 500 points and ended the day up 100 points. Well, that's weird. It's just the end of the day. Why? Then I know it has something to do with gap. But you see my point? Is that there's something going on out there that has nothing to do with trading strategies. It has only something to do with time, calendar time. So what if we made a system using that anomaly? I told you, you probably won't think it'll work. All right. When you listen or watch, as I do, because I don't listen, to CNBC, what do they talk about? What are the little things at the bottom of the screen say? The Dow has had the best month it's had since 2009. The NASDAQ has had the best month it's had since 1984, whatever. I made that up. But all these things have happened. The worst month since blank. I mean, that's all I've heard for the past number of months. Okay? So I guess my question to you is, if an instrument breaks to a new monthly high, for example, or just a new monthly something, but in this case, a new monthly high, does that mean anything? Well, on CNBC, it's newsworthy, and they like to talk to us about it. But is that a trading strategy? Does that mean anything, right? Price is up on my stock at a point that's higher than any other point during the month. So who cares? Does it matter? Right? Now, why would a stock or an instrument go up? Why would it make a new monthly high? We're just talking January, the month of January only, or the month of February only, blah, blah, blah. Would it be an earnings report? Sure. Earnings report comes out, oh, earnings are great, makes a new monthly high. Company news, we have a vaccine, oh, there it goes. Economic announcement, the Fed does blank, so it goes up, right? Let me ask you this, if a price makes a new monthly high based on some news that we know or don't know about, but it doesn't make a 55-day breakout, does that matter? So if it doesn't break out on the bars on the chart, if it just breaks out according to this kind of arbitrary month, does it matter? Does a monthly high matter more than an actual system or breakouts? Well, we'll run a little survey. I'm actually not going to run a survey. I just was kidding. You don't have to do a survey. All right. Let's take a look at Apple. Doesn't everybody start with Apple? Well, I'm starting with Apple. All right, here is the system. I hope it doesn't insult your intelligence. All right, go long when price makes a new monthly high. I am betting on the fact that a new monthly high means something, even if it's not a new 55-day high or a 20-day high. I'm betting on this, okay? So go long, here's the system, go long, long only. When do we get out? Well, here's a complicated exit, all right? You might want to get your pencils out. Exit when price makes a new monthly low. That's it. Well, wait, yeah, I know, it's ridiculous, it's ludicrous, but this is the system. You go long when price makes a new high for the month, and we go, or we exit, because we don't go short. Now, you could just reverse it. That's something that you can work on, right? You could reverse it and then go short, be in the market all the time, but I didn't for this particular, or at least for the first couple we're going to look at. And because we're using stocks first, we're going to go long only. Okay, because why? Because stocks having upward bias, blah, blah, blah. All right, for this, I use $10,000 worth of stock each time. TradeStation does that for me. How nice of them. And here we go. Hopefully it's big enough. I want you to see a bunch of trades. So I hope it's not too confusing. I know the chart is a bit muddled, but anyway, take my word for it. Here is September 2019. Price opens right down here. It's a little tiny red bar. Price gaps up on Apple, daily chart. Price gaps up. Well, that's a new monthly high. Now that's ridiculous. Monthly highs on the second day of the month, that can't possibly mean anything. That's arbitrary. That's silly. Well, I did it anyway. So it made a new monthly high. Oh, that actually meant something. Look at this. And then October opened. There's a little green bar there. And then it gapped down in October. And the robot, or you manually, just stopped the trade out. So we got in at a new monthly high, and we got out whenever a new monthly low occurs. So it could be in the exact same month, or it could be in the next month, or the next, or the next, or the next. As soon as price makes a new monthly low, it is over. Oh, and then let's go to October. After we sold out, oh, price gapped right back, made a new monthly high again. So the automated strategy went in, or you could just set, right? You could just set a buy stop right there. And look, ooh, price rose, still hasn't made a new monthly low, and made it all the way to December. Ooh, big gap down, and price was out. Nice big win, made a new high, huge win, made a new monthly low out. Now here's win, win, win. Yeah, I cherry picked. Got in at a new high. This is problematic, isn't it? Well, anyway, we're just trading the system, but that would be tough. After all these wins, to see another win and then have bad stuff happen, and here comes COVID, and now we're finally out, but not out until it breached this low, by the way. See that on a gap? It opened down here. So you would have been profitable all the way through. In COVID again, we tried in March. COVID's coming to be more and more of a problem around the world, makes a new monthly high, and then in the same month makes a new monthly low and is out. Price falls, and you know what's happened recently, right? In April, Apple made a new monthly high, and it's still going, right? When it makes a new monthly low in June, maybe it'll be gone, okay? That is the system. Is that too simple, right? And if you wanted to see it closer, I made it here. This is March 2020. You can see it made a new high, made a new low. There was the low, that was a gap. So obviously gaps are a part of this. I know you could probably improve it, make it better. The gaps are part of this, and you would have had to suffer that. That stinks. When it gaps your way, though, you get it that time. And here's the high. Price gaps, hey, went in our direction. We're in at the open because it's a new monthly high, and we're still in, right? So what do you think? Is this a silly system? Did I just waste your time, right? You paid good money for this festival, and I just wasted your time. Well, here's the summary from 2007. This is right before the first crisis that we really are aware of, at least the first since this one, right? I guess the last one since this one. So it got in right before the financial crisis, started trading, traded through the financial crisis all the way to now. Made $28,000. Remember, we're trading $10,000 worth of stock each time. Look at the profit factor. People love profit factor. I don't need it to be the highest thing in the world, but I do like that. Win rate, average winning trade 965, average losing trade 371. Max drawdown was only $6,000, and close to close was only 4,800. Something that simple worked pretty darn well, wouldn't you say? Now, here's what else is interesting about this. This is the exact same system. Check this out. No losing years since 2007. Wow. No losing years. Well, what about 2000? Nope. Hitting a new monthly high and getting on a low was profitable in 2008. 2009, it roared back. But look, 2019 was the biggest year, bigger than even the last financial crisis, right? Interesting, huh? It's not trading a million times, but it trades almost every month, right? Sometimes it trades, this one was nearly every month of the year, okay? Not a million trades for sample size, but it's so simple. Do you really need 8,000 trades when we're just trading new monthly highs? All right. Here's a quick tip for you, and we'll look at some more. This is a trend system, right? We want a new monthly high to mean that the stock is going to trend hard. So please use trendy instruments for a trend following system. Why would you use a stock that goes sideways? For example, like ERIC, AJ mentioned that, it goes sideways. It's a great sideways stock, right? Why would you do a sideways stock on a trend following strategy? I don't get it. People insist upon, well, we should trade on it. No, anyway. Same thing in sports. If you're betting for the championship, why would you bet on teams that don't win championships? Anyway, Amazon, is it a trendy stock? Yes or no? Raise your hand. Okay. Amazon, new monthly high. In October 2019, prices kind of wanders around, makes a new monthly high. Ooh, scary. Makes a new monthly low the next month, slight winner. Same thing, new monthly high, gets out at the new low. You see that? Recently, now we're into 2020. That would stink, beginning of the crisis, right? Tried again, didn't work. That one worked out nicely though. So Amazon would have caught that, and then it would be pretty much break even, a little bit better than break even now. If you're trading this live, okay, that's Amazon. How do you think that's gonna work? 2007, 2020, 23 grand. Smaller drawdown than even Apple. Pretty interesting, huh? Another good profit factor. Average win 860, average loss 354. Crazy, right? Is that crazy? What about Tesla? Now, Tesla is constantly in the news. Tesla became Bitcoin back in early 2020, right? Here's how this no changes, made a new monthly high in 2019, got out the new monthly low, same thing here. Look at this. In December 2019, it made a new monthly high. Did that matter? Holy macaroni. Wow. And it didn't get out till it made a new monthly low there. I mean, this simple system captured that. That's why I say, if you're doing a trend system, find stuff that trends. And then Tesla, April, after all this COVID stuff, back in on a new monthly high, and it's still in. You'd be sitting on a big winner, right? And there's the performance. It makes more money than the other two, and Tesla's only been around stock data since 2010. So made more money in a less amount of time. Is more volatile, right? But not close to close. It's not more volatile, right? But there's a lot of stuff that happens in between, right? I'm showing you some trendy instruments, and I honestly didn't cherry pick. These are the first that came to mind, right? Well, what if you traded this in a portfolio? What if you wanted to trade this tomorrow? Well, going same rules, long only, $10,000 a stock each time. Here's what you'd be up. Facebook, 2,800 bucks. Amazon, FANG stocks. What I did here, see that FANG stocks? Facebook's up 2,800. Amazon's only up 842. Oh, Amazon. Apple up nicely. Netflix, right? They're doing great during the crisis. Google up. Add all that up, and you'd be up $8,800 in 2020, trading this simple system with no further bells and whistles in a strategy using timeless principles that will be around forever. Not super fun, mind you, right? Although I kind of think making this money would be fun, but the system itself, boring. If you traded a $25,000 account, that was arbitrary. I just made that up. I did that because that's in pattern day trading. You'd be up 35% this year. Now, I know the market's recovering, but it's still negative as I speak to you tonight. So 35% would be a million times better than being negative. Not actually a million, you know what I mean, okay? Well, what about since 2017, right? Overall, the group would make 139 grand of profit, right? And oops, I lied about it. It's 2007. Typo right there. The overall, the group produced $139,000 of profit, and it's 278%. Those are right for sure, right? Actually, never mind. So it made money in 2020, a lot of money really, and it made money going back in time, right? So is that just stocks? Long only stocks, of course it were. All right, let's try the futures. Here's the ES E-mini. We'll use just the chart during the day, so .D, so it's just trading in the trading day. It's not the continuous contract. We're only going long because it's a stock market, and we're going to use a 240-minute chart this time, okay? Here's the system. Oh, a lot of red trades on here, right? new monthly high in a 240-minute chart. That's tough. We're in profit, and then it eventually makes a new monthly low, and we're out. Same thing here. We go into profit. Right, this is 2020, mind you. Right, so we're trading during the crisis, mixing it. So both of these went profitable. That's why this isn't fun, right? Out. Another one, a little bit profitable and out. It did finally do something good. Finally did something good, ES.D. And then it took another losing trade, but this is a big winner. And you'd be in a winning trade right now, right, through June. Okay. What does that look like if we go back to 2006? Well, it made 91,000 with an intraday drawdown of 19,000. Close to close was even better. Profit factor still good. The ROA, return on account, if you had your drawdown first, pretty good. Average winning trade, more than double, right? Not too shabby. What's our win percentage? 45%. But if we're going to have a winning trade better than a losing trade, 45%, actually pretty good, right? Not exciting, pretty boring, only 45%, but 91 grand trading just one contract each time. If you compounded, you could do way, way, way better. Same system, right? Now, I'm a big Forex person, have been since 2009. So let's pick a trendy Forex instrument. You know, there's a handful of Forex currency pairs that are known to be wild trenders, and the pound yen is one of them. There's a whole group of them. Right? Now, I did not trade it exactly the same, but I just want to give you a Forex example because Forex is great. Forex is different. This system works great on stuff with a bias, as you saw, but we would just need to add a few things. For example, we need a profit target, we need a stop loss. I didn't use a profit target or a stop loss even on the other two, right? Forex or futures and stocks. I did put one in for here, and I did use a 240-minute chart. Okay, here we go. Profit since 2007. Check it out, 90, it's kind of hard to see, I apologize. This is the actual report with 99.9% accurate data. 90 grand with a max drawdown of 19,000. Now that looks very, very similar to the ES, does it not? So yes, I did have to add a profit target. I did have to add a stop. They were both about the same. Actually, my stop loss was a little bit bigger on this one, okay? But the point is that even a new monthly high can do well on a Forex instrument where Forex is much less contingent on these monthly anomalies. It's just a different group of traders and a different group of people trading this particular instrument. A new monthly high means less on Forex, so you can't just let it run, is my point. You would have to put in a stop and a target, okay? And here's what it would look like. Now, this isn't really that much fun at all. Speaking of fads versus permanent. This is, well, this one was great. This was April 2020, I believe. Doesn't matter. This was the low for the month, and it breaks to a new monthly low, and it follows it till it hits its profit target, about 200 points away or so. Okay? Winner! Then, well, the profit is taken, but it's still a new monthly low, so the robot immediately took it again. And that didn't work. It got stopped out. Oh, it made a new monthly low. Oh, it got stopped out. Oh, it made a new monthly low over here. Oh, it got stopped out. It just doesn't mean as much for whatever reason. Make up your own reasons for the pound yen. So you can't just trade it as simply as the others, but you can use exactly the same concept, and you can use the eternal concept of breakouts in a monthly fashion. Okay, so to say again, what I just say is on stocks and futures, what's holding you back? Now, take this and code it up or start testing it manually. I mean, you saw the numbers. What is going to prevent you from trading this right now? Just go and do it, right? It makes money. Crazy, as long as you're trading something that moves. But just make sure you got a trending instrument in this simple system when you saw it, right? So that's your takeaway, right? Even on the ES. I would diversify though. I wouldn't just trade one. I would diversify like either the FANG stocks or just get a group of 8 to 10 and start trading it and make money. If you want to do this particular style of breakout, using calendars on FX, on Forex. We definitely need to test. And I'm in the middle of testing a bunch of pairs and doing a lot more work on this because I'm fascinated by it. Pretty easy to test on the others, right? You saw how it worked. So you'd have to, if you're going to test a little bit on your own, test the target, test your stop, maybe wait a week. Don't trade the first 2 days of the month. Maybe wait till you're 5 days into the month, right? A new monthly high on the first day means not as much, obviously, in FX. Or end at the end of the month. Maybe we don't trade past the end of the month, right? We just make that a hard stop, kind of a time exit. So those are things to work on. But trading it with just stops and targets worked pretty well. I mean, it still produced a ton of profit, okay? So overall, this is an incredibly easy system that is definitely not a fad. Breakouts have been around. I told you, breakouts have been around literally for decades to hundreds of years to centuries, right? But you have to know who you are because it's hard to trade those breakouts. I mean, those trades on the pound yen, tell that to your friends. That's horrifying. Oh, I bought the new monthly low. That's your reasoning, Johnny? Yes, that's my reasoning. Well, how'd you do? I stopped out. It's easy and exciting and potentially very lucrative, right? And potentially bragging rights if you want to buy and hold something hot, if you want to ride Bitcoin, you want to buy tulips in the 1600s. It's boring to follow trends, right? But trends can be lucrative, right? Over the long term, maybe not as lucrative as getting Bitcoin perfectly, but it can be lucrative and it's not dangerous. It's been around forever and it's never going to bankrupt you. You're never going to buy it 19,000 and watch Bitcoins fall. You're never going to buy tulips at the top, right? So I gave you all this information. I mean, what do you like? If you happen to like breakouts, I don't have anything to sell you tonight. I just brought you information, but I would love it if you had thoughts, if you wanted to email me. I would love to hear what you like.